Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, government is unshut down, so let's see some interesting things today. Let's come over, check the charts. I can get my mouse to work here. Okay, so Treasury. Well, in the end, the Treasury did push up a little bit higher. It wasn't like too much, but got there. This morning, though, they are on the downside again. So it keeps coming to like 113 and having difficulty holding above that. S&P 500, meanwhile, yesterday started out with a boost that's not yesterday. That's the overnight. Yesterday, overnight started out with a boost, sold in the overnight. And it looks like we're getting the same thing today. So I think there is a little bit of concern that we could face this, especially if, well, I don't know, it could be both ways. If we get some data, we may get some jobs data here, and it looks bad. That might cause the S&P 500 to sell off. But if interest rates go higher, that could also cause the S&P 500 to sell off. Oil. Well, oil took a huge beating yesterday. Back to 58. Gold. Well, gold's, it looks like they're like eyeing those new highs again already. Like it only took 2 days. Well, I mean, it only took like 1 day to sell off. Silver, copper. Copper's looking okay. There is, like for a while there, it was like copper was doing its own thing. But now you can kind of see the correlation there. Japanese yen. Well, not new lows yet, but still doesn't look very good to me. And Bitcoin. A little bit of selling. I mean, I don't know. The funny thing is that when we had this come through, it was like, oh, the bear market in cryptocurrency is over. But like it's just a drop in the bucket in the end. So my throat is a little bit, As soon as I started speaking, I'm like, because like other in my family are like sick. So I hope I'm not getting sick. On time, so you're the only one here. Yeah. 2 concurrent viewers. That's funny. While I tried to be faster, I just had a quick microwavable sandwich because I was worried that there could be like 8:30 news or that, we would start to get economics stuff. So, okay, well, let's see here. Financial Juice is telling me the next US CPI report is delayed despite the end of the government shutdown, and the October 2025 data is unlikely to be released as originally scheduled for the 13th. The BLS will release a new schedule, but the report will likely be delayed by at least a week. Oh, okay. So that means we get to just chill. Well, we're hitting the downside target on the overnight. So we'll see if that holds. You're not alone, says Octavius. I guess leave those tabs open. r/cs career questions. Corporate IT is yet to adopt AI in a big way, yet everyone attributes layoffs to AI. I do think that it is AI, to be honest with you at this point. But it's not AI like, oh, we automated your job, we don't need you anymore. It's AI like interest rates are high and we need to keep interest rates high because we're worried about inflation. But at the same time, we feel like we need to invest really, really hard into artificial intelligence. And so we're going to lay other people off so that we can make those investments into artificial intelligence. And it might not be at your company, because at your company, if you're a smaller business, you're probably just like, you know, they're doing their thing and they're cost cutting. But at the big tech companies like Google and so forth, they are putting like all of their CapEx. Oh, hold on. I forgot to turn off the speaker here. They're putting like all of their capital expenditure into building out AI. And so there's all of these jobs that they probably would have created to try and grow their businesses that they're not creating because they're putting it all into AI. Who is this saying AI is not like the tulip bubble? Invitations have been going out for a November 18th dinner with President Trump is throwing for Saudi Crown Prince Mohammed bin Salman. Not a state dinner because he is not officially the head of state, but a formal dinner with a lot of pomp. Some members of Congress, members of the administration, and business leaders are all. Is this the one that with like Jamie Dimon and other finance people? Oh, Dally. Feds Dally says, I tend to lean on AI not being akin to a tulip bubble. Well, yeah. You know what, Dally? You should continue to say that. You should continue to say that, because if this whole thing like goes south, which Federal Reserve Bank do you think is going to be on the hook the most? Yeah, that's right, your bank, the Federal Bank of San Francisco. Is it true? Is what I've been seeing with Michael Burry that he's going out of business? There's investinglive.com. I don't know how reliable of a news source that is, but this reflects stuff that I've been seeing on Reddit. I repeated this often and I will repeat it again. Short selling is hard. So hard that if someone actually gets it right, they make a movie about them. And it turns out that if you get it right, it's more a case of luck and timing than skill, because none of the people in the movie have done it again, and none of the famous short sellers make money. Don't short. Yeah. Michael Burry was in the news lately for filing a 13F showing a large put option positions in Palantir and Nvidia. That seemed to get the market's attention as both have struggled, but what many commentators missed was that the positions were for Q3, which ended September 30th. He was deep underwater on those puts, and even with the large drops in both lately, he still is. And in any case, he's throwing in the towel and will convert to a family office. Dear investors with a heavy heart, I will liquidate the funds and return capital, but for a small audit/tax withhold by year's end. My estimation of value in securities is not now and has not been for some time in sync with the markets. With heartfelt thanks, but also with apologies, I wish you well in your future investments. I do suggest investors contact my associate PM Bill Clifton regarding his upcoming endeavors. He can be reached at phil@palmadariumcapital.com and I won't read out the number. Phil is a tremendous young talent in the field of investment and the most prodigious thinker I have ever encountered. Okay, so there was been this whole thing that he's like, he was teasing something for November 24th. And now it comes out that he's closing his fund. So what is he going to do? Maybe Michael Burry is going to become a social media influencer. Alex says, we haven't heard a lot about net job losses from AI yet. It's because it's all of the jobs that you didn't make. Honestly, if you look at the amount of money, man, where's this story? Let me pull this story up. Zero Hedge. It will take $5 trillion to fund the AI cycle, according to Zero Hedge. Wait. So, there are There are 300 million thousand hundred 300 million people, and then right here we would have billion, and then 5 trillion. And, you know, all of these cancel out. So, 50,000 divided by 3. $16,000 per person. So let me get this right. We're going to spend $16,000 per person to build out AI. And y'all don't think that that's not like, think about how many jobs that could create. But none of that is necessarily jobs. Well, I mean, some of it will create jobs, but that's going into like buying GPUs, power, training the models, things like that. That's insane. Well, it looks like they are just kind of blowing right through the projected range level that we would have for the extended session. So although let's keep an eye on it here. Maybe it will give us a reversal. Let's see here. Today's Thursday. Oh, so we didn't even get the jobless claims data, did we? Have a 30-year bond today, though. And we're also going to get Kashkari. Though that will be after I'm gone. Let's see here. On r/order flow, I said, well, I'm not convinced that what you get here on the footprint chart is all that great. And this guy says, I can show you pretty profound images using a custom template I have in Seer chart. Completely useless. You need empirical data. Just a picture is not enough. The same thing with, you know, like what we're looking at for projected range. You know, well, there could be some edge in it, but like in order to prove that there's really some edge in it, we would need to like backtest it over data that we don't have. I can almost guarantee you that the levels you have marked up on your chart, who says that I have levels marked up on my chart? Are not levels unless there is high volumes traded at the area. The high volumes that you see are often just coincidences. So that's where low latent, the market tends to settle where there's low latent liquidity, and because it stays there so long, that's what creates the volume nodes. So you're looking at something post hoc and saying, oh, it matters something, but it doesn't. Now, strategies based around this best edge I've ever found. Never had to predict anything. You just trade with one. Yeah, okay. You say so. Have you been doing it for 5 years? Otherwise, I just don't care. And this is the same comment from one person. Delusional. You didn't really understand what I was saying about the footprint chart. What I was saying about things overall, because he's so enamored with his idea that he can't prove.
Block by.
Okay. Okay. Let's go for it. ZB's range is horrific. Oh, yeah, you're right. What is with that? Well, so if I come back over here to my chart, my what would we call it? Our volume profile chart. Which at this point, I'm not even sure if I look at the volume profile nodes. I'm just paying attention to where it goes. And the volume profiles are really good for me to tell like where each session started. But I digress. Down at the bottom, we see the spread between the 2 and the 10. And we see that there has been flattening. So on this trade, there are some things that I don't like about it. I'm just going to give it the wide stop. But we would, you know, just on an emergency. But like the thing that I'm kind of seeing right now is that if I don't get the little bit of mean reversion that I want, and honestly, back to the 25 would basically just bring us back to the projected range. So I'm not looking for anything huge. And that's just like on the first contract. But if it doesn't, then you're pushing new lows. So I don't really like that, especially if like a headline were to come through that push us really quickly. That could dash us really quickly. Let's just kind of watch it. We are getting the flow that we want to see. So Disney CEO says 80% of subscribers to new ESPN apps subscribe to the bundle of service that includes Disney and Hulu. Oh, you know what? I never read this. Somebody, Big Ugly, in Discord posted this link that I wanted to read. Twitter. How to tell if the trading company you're interviewing at is actually a scummy bucket shop that will take your money. So are there actually places where you interview for, quote, trading company and it's actually a bucket shop? I hadn't heard of such a thing. Are you trading a live account? This one is a sim trade, unfortunately. Probably should take it over down here in the live account. Over here. Let's see here. What would we be taking? Well, you get at best 107 to 097. I don't know. Let's keep track of that. I don't know if this move is enough to get us 10 ticks over in the micros anyways. Okay. What's a bucket shop? A so-called trading company whose revenue primarily comes out of the people who think they're employees of the company. A real trading company makes money from profitable trading. They make you put up your own money or pay fees or both. A genuine prop trading firm will never ask you to deposit your own capital to trade. A genuine prop trading firm will never make you pay for a simulated account as talent scouting. Minimal or no base salary, only profit split. Bucket shops are commonly classified traders as independent contractors who live off of trading profits alone, often splitting those profits with the company. So if you don't make money, you earn nothing and lose your own stake. Meanwhile, the shop makes money off of you. Platform fees, exorbitant commissions, service fees, cash out fees, no matter whether you make money or not. Okay, they're hitting into 24.5. That's good. By way of reference, in 2025, Tier 1 prop firms pay their new grads $300K base salary and $200K guaranteed bonus in their first year. They're running a business, and that's the going rate. The firm you're looking at can't pay you $1. That's because they don't have it. Unrealistic promises of huge leverage and job autonomy. Be your own boss. Trade with 100-to-1 leverage. Unlimited earnings. No legitimate firm advertises the amount of leverage they'll give you at every legitimate firm. You know, I have not seen anybody advertising such a thing like that. Just funded trader. Okay, we did go bid, but not the strongest bid yet. So, and the 5-year didn't come up with that either. If you don't know where VE Edge trades, you're trading against, you're the one with the negative VE Edge. I don't know what they mean by VE, but okay. The machines you're trading against react in under a microsecond and absorb megabytes of data per second. You react in 200 milliseconds and look at a few bytes of information, not a fair 5 EMS. A great trading program you have to pay for. Legit prop firms don't make you pay for training. Bucket shops will advertise the names of the senior traders who will teach you everything they know, but it's all BS. They know. What they know is how to scam you. Extremely hard evaluation tests and profit thresholds. Scam bucket shops make new hires go through a trial evaluation period where you're paying for the privilege, and passing grades are so stringent that almost no one passes. But don't worry, you can try again. Xian is consolidated for 12 days now? No, really? Wait. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I really don't consider this move consolidation. This move maybe right here, false breakout. False breakout. This one was, what was it? On November 5th? It was like PMIs or something like that. And it was like broken. I thought, well, but you know what? I still think that, you know, as the other data comes in, that the chance of, oh no, actually it wasn't even that. It was, I think maybe it was a Fed speaker or something like that. Anyways, I kind of said, nah, I think that they'll say, nah, we're still going to have a cut in December. And so far, we've at least come over that. Okay, Octavia says, look at a daily chart. We have been consolidating, but is that actually 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11? Okay. I don't know. Even if we're gonna call it consolidation, why did I say that? Let me start over. Here's the thing. We could call that consolidation. But it's not like that's unusual for the Treasury, right? Pretty standard affair. I would think. So what would we want to conclude from that? Good uptick. That's a better uptick. I want to see that over 2,000 though. There we go. Okay. Over 2,000, a few contracts that hit into it. I think we're okay. We have a chance of getting filled at 25 now. So I think one side would say, well, because it's consolidated so much, we will continue to consolidate. But that's been consolidating for quite some time. Maybe it would be time for a breakout. And, you know, like, I don't think that it would take very much in the form of, like, economic news, for instance, for us to go back to, yeah, we're definitely going to have a rate cut in December, right? On the split side, just because it's been constrained for that long doesn't mean that like a move is imminent. So I don't know if there's any, like, really, I don't know. I'm just using it as an example. I mean, I do think it's something interesting to note. I'm just kind of using it as an example of that doesn't necessarily predict anything. Okay, so 14 have gone into 25. Okay, that's better. It's going to say, I don't know if there's 3,000 contracts that have to go through. But I'm actually 800 in line. So that's curious because right now, if they were to fill me, when that happens, usually means that they're going to blow right through me. But we're not getting the market orders to do it yet, so. It's bound by the option walls, heavy option decay happening. Well, now that I think is, you're getting with something, yeah. Okay, I got filled. Oh, that was actually way more trade than I thought was going to go through. That actually, there was some iceberging there, and they had to trade 3,000 to clear. But now I can just kind of sit back and relax, huh? I don't know. So this is where, like, in some of the plays that we've done, that Uzi has done this on, he plays out all the way back to the other side of the range. Like the next option level is way up here. I don't know if we're gonna get up there. That seems a little extravagant, but let's see what happens, okay? I think that sometimes I come in and, like, I will have an expectation that it's going to move or not going to move. And then I just force things based on that. Like right now, I kind of came in thinking that because the government shutdown was over and all of that we would get some activity. And so I do think this is a good setup. At least we got the 2 ticks. It was good for 2 ticks. But then a part of me is looking at this and going, but is it actually really doing something? I kind of feel like no. And I kind of feel like that we got to be careful because that may have just been like, okay, 2 ticks back is all you're going to get. And then they're going to continue selling. Although I'm not 100% sure why they were selling going there overnight in the first place. So. Does the option level work on the Treasury? So looking at, you can see in the upper left, those are projections based on at the money options pricing. And we find in the Treasuries that it tends to work pretty well. In fact, this situation right now, where they went through the line and bounced, is not common. Usually, the extended session and the regular session will be relatively close together, and they'll go to whichever one is slightly further. But in this case, it's too far away, so they didn't do it. But to just pierce through that, and then we start to see this buying flow come in, a little unusual. Where do you get them? I get them from an indicator that you can buy at speculatorseth.com. But if you want to do it manually, you come over to barchart.com. I should be gatekeeping harder. No, we want to go here. 10-year note. Barcharts.com. Options quotes. And then you get this implied volatility number. This implied volatility number, how do you calculate that? What it's doing is it's looking at the money options, and it's looking at what it's pricing and the number of days left in the contract and coming up with a % number based on that. I need to gatekeep harder, man. You know what? Like, so here's the thing. We I don't know if maybe a lot of you were gone, but late in our session yesterday, I started to kind of look at some of these strategic things because I feel that we've built a pretty good base for a YouTube channel and for a business for that matter. And we've had way more success with it than I ever thought that we would. But it's not anywhere close to generating enough income to live on and get to be able to spend, more time on it, making all of the content that we would like to, and making some of the other things that we would like to, like our own trading platform. So how can we get there? And it's definitely possible, because there are people out there that have been doing this not as long as I have and don't know nearly as much as I do about the trading, that have just had massive success as influencers, right? So what do I got to do? What's holding me back? What's the next stage? And part of it is, well, I'm a little ADHD, and so I have a hard time. Like, I will feel really engaged on an idea and it'd be like, this is a strategy, this is the thing that we'll have to pursue, and I'll pursue it for like a week or two, and then I'll forget about it. Especially when it comes to like what kind of content I post on TikTok. I'll keep posting that kind of thing until it seems like it's not really working, and then I'll forget about it. And for TikTok, you probably need way more consistency than that. It kind of sucks because, man, early on, there was definitely a period where I was growing so fast with TikTok, and I thought that it was going to surpass the YouTube and all of that sort of stuff, and then it just like quickly died down. It was really sad. TikTok algorithm changed, I guess, and I didn't keep up with it. I didn't evolve with it, let's say. So we started talking with ChatGPT to sort out what should we do here. And one of the ideas was we should start a Substack, and we can talk about the things that I tend to spend more time talking about here on the live stream. Here on the live stream, like, what are the things that we're looking at that will predict future orders? In this particular case, I was expecting more activity today, but largely because I thought that we would be getting data, and because the government shutdown has ended. I'm not really seeing that, and we ended up taking a purely technical trade. Okay. Purely technical trade based on predicting future orders from options. And it happened. And I think it's kind of a perfect example, even though I don't like it because it's purely technical based on the options. I think that the execution here was almost perfect. Because we're sitting there, it's below that level. And we say, our predictor says that we should see aggressive market buyers come in. And so the instant that there was any kind of aggressive buying, we bought in, and we were able to get at least two, probably could have taken a third tick, if I had a limit order. So, cool. That's the way that you want to do it. Should I have, now, the way that I'm doing this is I kind of used that trade to take on more risk, right? I took 2 contracts. Now I'm going to let the second one run. That one, I don't really have any edge to say, like, it's likely to go further, or, I should take the 2 and then let the one ride, or it's just pure risk taking. Okay. So the idea was have a Substack where I post every day. I think it would be every day I would post those sorts of things. What did we see in the market that day that was driving the flows? And what are the things that we can see on our dashboard right now that could predict future orders tomorrow? In addition to commentary and things like that. So basically, the things that I talk about on the live stream that I don't really talk about in the YouTube videos and the TikTok videos, because it's just like the context doesn't seem correct and everything. That can provide edge for traders, and I can just go into a lot of detail with text. That would be a lot of work for me. I think that I would really like it to be like in the morning, but I don't have enough time to write it in the morning. So it would have to be something like I would post it after the market close in the evening and maybe spend an hour or two writing it. And the idea behind that, though, is kind of like right now I am really a educator influencer, right? Educate about trading and influencer about trading, and we do the live stream, right? Which really all just kind of grew out of the live stream and the YouTube becoming successful, right? And you know, we could just continue to make YouTube videos, but we already kind of tried that one for 9 months. We already kind of tried that one for 9 months and didn't have success with that. We weren't able to really grow the channel by really focusing down on videos for like, several months and making a lot of videos. Some really good videos, but ultimately, like, none of them really popped off. So we got to try something else. And this, how did ChatGPT describe it? ChatGPT described it as you're becoming more of an analyst and thought leader, is what it says. And I have super mixed feelings about it. Super mixed feelings because on one side, I think that there's a part of me that really doesn't want to do it. Not because I don't think that it can work, but that I think that there's a lot of chance to it. And I'm just really tired of putting a lot of effort into things that don't turn out, This is this me burning out as an entrepreneur, I think, is what it is. But then, and then there's also this thing that's like, well, you're kind of to some extent saying what you're doing right now isn't working. And so if you abandon that, what are you really saying? And is that really what you think? But then when I go over to the we're really going to push the Substack hard sort of a thing, I feel that maybe that does reflect what I think better. Because at the end of the day, I think that if you day trade, you are almost certain to lose money. On a long enough time horizon, 5 to 10 years, you're likely to lose money. And if you do make money, it's not going to be nearly enough to justify the amount of time that you put into it. And the amount of time that I put into it is really quite insane, right? But somebody has to trade. Like, that's the thing. Somebody has to trade, and there's real insights that you can gain from trading and watching the market and doing that play by play. So it kind of turns into, I'm going to day trade, not necessarily because I make money, but because of the insights that we're able to glean from it that I can then give to you. And it should be useful to you, whether you're day trading or you're just a business person or you're a regular person that just wants to keep up with the economy. So the kind of person that doesn't actively trade in the markets, but they still go to CNBC, could benefit from my Substack. I feel like that's in a better alignment with what I really think. Because where it is right now, it's like I'm educating you on something that I don't think that you're going to be successful in. I mean, I've had traders that we've trained here, or that have joined this community at least, let's say, that have been successful. And we have a really large portion of the community relative to other communities that have been around for a really long time. So I totally believe in what we're doing and everything. It's just that at the end, hold on. Okay, what time? Like right now? Okay. Okay. Anyways, I need to go take a kid to school because mom is feeling sick. Anyways, so like I totally believe in what we're teaching. It's just I don't think that it's going to result in the result that most people want. You know what I mean? Big Toasty's been here since the beginning. Yes, you have. Thank you so much. Like I think you were here like when it was before we were even live stream. Anyways, so is that, you know, like focusing more on just showing what the market has been? Is that more in alignment? I don't know. Tell me what you guys, I'm going to go. You guys tell me what you think and we can discuss it more when I get back, okay? But I don't know. Because the bigger issue is I'm having a really hard time staying motivated right now. All right, I'll be right back. Okay. So S&P 500 hasn't opened yet, but right now it kind of looks like risk off and rates increasing. I think our original trade, for what it was great, but obviously the degenerate gambler part of it did not work out. Anyways, I feel like the coming in and saying, okay, I'm going to come in and I'm going to teach you about the market, and I'm going to teach you more than anybody else on the internet can teach you, and really get into provable empirical information. But even after all of that, you're extremely unlikely to make any money from day trading. So, like, then why learn all of that? Well, because you want to know? Because you want to try? The thing is like the thing that I can give you that's going to give you the most edge is like teaching you how to read those informational inefficiencies. And that is something that I can really only do, like day by day. And so if I'm going to build a service off of the thing that's going to help you the most, I feel like that it is a Substack. Right? That makes sense. So I feel like that a Substack is in better alignment. I mean, I think that the thing that's in most alignment with what we know is live streaming, right? What we know and what we're trying to do. But like what we get on TikTok doesn't really, it's just kind of blah. There's no strategy behind it. There's no like, okay, even if we blew up on TikTok, and I've had a couple of TikToks that got hundreds of thousands of likes and stuff like that on things that were not related to the market, and then it didn't help us at all, right? It's all over the place. Instead of we build that up around a single purpose, and then that directs you to the Substack, then it's strategic, then it makes sense, right? Hassert speaking, saying I don't see much of an argument to not cut rates. By the way, that's a really, really massive order at 23. So let's keep an eye on it here. One of the things that I'm noticing is that the amount of selling that brought us back down here wasn't very much. So it seems like that the market makers are a little bit more squishy on the bid side. So, which is not good for a long, really. We're going to need to see a lot more buy-in here. But we're now to a point where maybe another wave of buying could come in. We'll see if it does it before I have to go. Last time when I said that, like I left it going and then it didn't, I didn't watch and it didn't go very well. So I think that we will just take it off at the top of the hour. So let's hope that it runs. So like I'm still thinking about this Substack thing because I think that there's really great value in this stuff. But it's going to be most valuable to somebody that's trying to make money from trading. And I'm struggling to like, I want a broader audience than that. And I think that's ultimately my real problem, huh? Feel like I've kind of become, I don't know, is there somebody else that's live trading treasuries bigger than me? I don't really think that there is. So I feel like I've kind of filled out my niche, and then you want to expand, but then I feel like that the people that I would be expanding to are idiots, you know? That bid at 23 is now over 10,000 contracts. So I think that we have to treat this one a little bit differently from how we normally look at those big orders. Because normally we look at a big order and it's like, well, there's going to be a big order at the extremes. But this one is unusually big. And then you could also look at it as like, is it a spoof? And we can use all of our heuristics to kind of decide whether it's a spoof or whether it's the real deal. I think it's well into the session that if it was, any large order, especially like right on the bid, I would be like really, really weary and suspicious of, because like, why would that be coming through now? But no, instead, this seems to be more something like from the robots and whatnot, that whatever it is that causes there to be a lot of liquidity on the ends, there's an unusually high amount of it this time. So that means that there's something unusual going on here that is more technical in nature, I think. Not I think. To me, that means that there is something going on here technical in nature that is unusual. I suppose one takeaway from this could be that if we break out on the upside, there's a big order at 26. If we were to plow through 26, then this might have a little bit more room to run. Also, pointed out earlier that the yield curve yesterday flattened, but you can see from this one that we're kind of getting this wonky thing where it's not even across the curve. So it's kind of more of a butterfly trade. Okay, well, we got the 3 ticks pretty easily there. I wouldn't say that there was a huge imbalance in market orders there, though. Oh man, if the S&P 500 starts out and start cratering. You know what it is
Block
that I need.
sell.
Okay, I didn't like that. 5K at 25 half. I think that may just cause 25 half to become the new value area. Was that a big? Yeah, that was a pretty big change in the deltas. Like that is maybe something on its own that could, like if I had only, even now, I think I have to consider taking it off at 25 half, I think. But I'm gonna let it do the next play. Anyways, I was gonna say, I think what I really need is I need you guys to be like, I think that's the greatest thing ever. I will totally subscribe to your Substack stuff. I would really, really like you to create this content. I think it would be super useful to me every day. Right. And this is what we, this is the next thing, 26. I don't know. When I look at cumulative delta, it's flat. But when I look at the DOM, I'm like, oh, there's been some pretty good buy-in through here. So that one's a little weird. I can say I don't know on that one because I don't know. I can't explain that one. But it looks good for us so far. Oh, and 26 was where I said there was like 7K there, right? And now there's only 34. So I would still like to see them trade through 26, of course, and stack a bid. Also, look at the stacks behind us in this area. Really strong. Oh man, there was a lot of spammers last night. I didn't catch. Come on. They're nibbling at it. At the very least, I'd like to see that offer go below 2. Below 2K. Do you trade spreads too? So every time that I try trading spreads, I don't get very far with it and it doesn't seem to work for me. I find that, at least on a short-term basis, trying to predict the yield curve seems to be incredibly difficult for some reason. But we definitely keep a very close eye on it because that dramatically affects the order flow that we're seeing. And you kind of have to factor that in. Like if we were getting flattening, I guess today it has been some slight flattening. So if we're in slight flattening, we should expect on a move up that ZB should move further than ZN and that we would see more selling in ZN despite it moving up. And vice versa between ZN and ZT. ZT, by the way, is like on the edge of its range. So if they start hitting that 046, that would, if that flipped over here in ZT, that would definitely be enough to push the 10-year up. Okay, well, in ZT, it looks like they cleared it without any trading, and it was really being pulled up by the others. In ZN, they traded 6,000 contracts to take it through 26. So there was 7K earlier. So really what happened there was that they converted their orders into refreshing orders so that they could get filled. But the buyer was willing to take them, and even with taking that, we're still, we're still a ways off from the high end cumulative delta that we had at the previous peak when we started the trade. So, I think that if there is a large buyer out there, that the market can probably still handle him. And so they might just continue to push. But let's see, that 26 also becomes a key point where, like, the 6K on its own isn't enough, but it's a little bit of a red flag. Like, if I continue to see big transactions there and I start seeing the low resting liquidity at 26, then that kind of suggests that we're going to get stuck. by the way, 26.5 was our inventory cost basis level where we often see bounces. So okay, so that time it was 2000, which is just kind of average, but it was a good stack when it cleared through it. I would say overall that this is a very thick market today. Like we're pretty frequently seeing 4 and 5K on the inside bid and ask. So that's significant. Okay, so I don't like that. They traded it down, and I've seen a little bit of low latent liquidity on both sides now. I guess in this situation, I can keep it until the end of our time frame, but it's making it likely that 26 is the best we're going to get. And while this is all happening, S&P is really cratering. Actually, are we like below yesterday's levels now? Oh yes, well, we easily are. It's actually new 3-day lows. So there's going to be these single prints going all the way back to like 68.11. Oh, that's not that far away. So let's say 68.10. Seth, don't you think that putting up the Globex volume profile instead of just a cash would be more helpful, since most traders look at that one? No, not for that reason. I mean, that would kind of presuppose that there is some sort of informational content in the volume profile that helps me predict future orders. And ergo, we need to have the extended session rather than the regular session to include as much of that data as possible. But I just don't believe that that's the case. I have the volume profile up because I want to see, okay, yeah, it ticked up. It took 2,000 contracts to trade it. But when you really add all of it up over the multiple ticks up and down, how much was it overall? 45,000. That's what I want to know. And if I have the extended session up there, and I already have those numbers on there, then it's harder for me to sort out what was going on there. In other words, I'm trying to get information about like the current conditions. Now, I could use a footprint chart for that instead. Might be more useful, but so that's kind of the way they approach it. That makes sense. Yeah, I'm kind of on an anti footprint chart kick because I'm seeing so many retail traders talking about it all of a sudden. So. And there's so many people that really think, oh, well, if you just draw your levels based on the volume profile and you do this and this, and I can show you some pictures. I'm like, I don't think so. I haven't done as extensive of testing on footprint charts as I have on some of the other things, but the little bit of testing that I did do kind of suggests to me that it's not what people are thinking. Especially the one that bothers me really is the significance that people place on the point of control. You still use? Yes, I do. I still use Edge Clear. man. I still feel really torn about what's the next thing that we should do. Okay, so we're getting a little bit of something going on here now. There's a little bit of reversion in ES, and I'm seeing orders getting placed, so that might be what's going on there. What's up with their recent platform up? I don't know what you mean. I haven't logged into their platform in a while. Never need to. Everything just works. When you say their platform, are you talking about like their web interface that allows you to like deposit more funds and things like that? Yeah, I do see Verex pointing out the bear close is fun. Now we're going to crash. That would be incredibly ironic. I mean, the thing that's really weird about it is that it does seem, oh, that was a strong uptick for some reason. It does seem that the bear market or the bear action in the S&P 500 started out when we found out through the 13F filings that Michael Berry had those short positions. But now we're finding out that like he's closing his fund, that he just hasn't been doing that great. Even though I think his performance overall has been pretty good from what I saw. So, and then he's teasing something on the 24th. What's that going to be? Is Michael Berry going to start a Substack? Right? Like, it's just... Do you understand my conundrum here? Like, on one side, I think it seems almost too perfect. It's like, okay, that's something that I can do every day, that I can stay engaged with. It will really help my own trading. It'll be providing value to people. It'll be the things that I really think can give people the most edge, longer term edge, and like the thing that's going to help them the most in developing as a trader, even if they're still unlikely to make a ton of money from it. But that's all just way better in alignment with what we know and what we're trying to do. But then it's like, yeah, but will that many people sign up for it? If like Michael Burry is starting a Substack, and it's like, well, do I do Seth's Substack or Michael Burry's? Of course you can do Michael Burry's, right? It's just like, and then I just I'm like, well, maybe I should just give up on the YouTube channel altogether, which isn't to say like we still do the live stream and all of that, the stuff that's working and that we enjoy, but that I'm not putting in any effort in it, that I just don't want to I just can't help myself. And if I'm going to do grinding, I grind leak code or certifications or something like that, I guess would be the alternative. No. Ultimately, at its heart, I believe that I have some talent here and that we have some information that needs to get out there. And so I need to continue trying. And the question is just, what's going to be the most effective way to get that message out? And it can't just be what's going to get me the most viewers. It has to be actually getting that message out. I think that of the ideas that I have now, the Substack is, because I went and I did all the work. Like I set it up. I kind of created like, okay, what is our regular daily kind of thing going to be? But I didn't actually write an article. That's when I kind of ran out of steam. For whatever reason. Kind of sucks because, I had a relatively free day. What's one of the things that kills me? Is like when I have that free day and then my wife lets the boys come in and just start bothering me. That really kind of kills my motivation for some reason. Because then it's like, oh yeah, I'm gonna have to kick them off of Minecraft and kick them out of the room first before I can get any work done. And then what am I gonna do? I'm gonna, be knee deep in Rust code, which is hard, which is really hard. I wish there was a trading room here that's like a trading room with everyone talking about key news and why they're trading. Well, I mean, that is what the live stream is, but I do kind of wish that it was more, that there was more people contributing to it, right? Like we've tried kind of doing that, and I'm not quite sure what the way is to get it to work, but it's something where like you have a room, like you use the Discord stage, and when people want to point something out, they can take the stage or whatever the deal is, right? But then it's like, actually, isn't a better way to do that to just have Discord channel and people comment in Discord channel? And the struggle there is that we have that and we have people that contribute that, but then you also get so many people contributing to that are just using technical analysis nonsense. And so you get too much noise, right? So I think right now, the best like tool and venue that we have for that is the private Discord, the $3 Discord. You pay for the $3 Discord and you leave those insights in the individual market channels. Because over there, if people start talking technical analysis mumbo jumbo, I just get rid of them. I probably just turned into noise so fast. Yeah. Well, it is, that's maybe one of the advantages in equities is that there's a lot more people talking about the individual companies, But also, the Substack, I think that the Substack will be like that. I would really like to really try and push commenting on the Substack. I think that like my format, actually, let's, now that I'm kind of thinking about this. I'm going to get going here in a few minutes. So the format that I was going to have is like, here's today's action in these different things. It should actually be today's action and review of predictors. Okay. And then here's the major macro markets that we want to look at. And then we have tomorrow's predictors. But then I also should have questions. Like I want to ask specific questions and get responses, so that the comments of the Substack, that there's a lot of comments for every post that adds additional information, I guess maybe one of the reasons why I'm a little bit, I should write in this on this too. The goal is 160 subscribers. So I'm thinking that we should put it up for $20 a month. $20 a month times 160 subscribers will not be enough for me to live on, but it will be a respectable amount. And it will be a respectable amount that will allow us to really build the channel more aggressively. Like an extra $3K a month in funding that, we save that up and everything. There's lots of things that we can do with that will help us grow the channel. We can put that into advertising the indicator suite. We can put that into better editing. We can put that into funding larger accounts to give people the wow factor. We can put that into more subscriptions for services. so that the information that I give you is even better in the Substack, right? Not enough to live on, though. The only thing that I think I can do, besides get a regular job, that will really put me over the edge and it'll be like, yeah, I can make enough from this that I can just do this, would be for the YouTube channel overall to just blow up. To just like really take off because of one video or something like that. Oh, by the way, I should really have an order sitting out here at 26 because it might be difficult to get filled there, and I do need to start closing it up. So if you can fill me, good sir, at 26, I would appreciate it. That is indeed, from what I said earlier, you kind of saw the low latent liquidity, and sure enough, it has been stuck here at 26, even though it has tried to break up. Retail traders can't have an edge in scalping. I feel like that's too broad of a statement, right? Sorry, maybe I'm just a little too autistic, neurodivergent, or whatever here for this situation. Let's say retail traders are unlikely to develop an edge in scalping. Probably true. Probably true. So why even continue day trading? Well, there's a lot of valuable information that gets pulled out in the process of day trading. And I think that information is things that are sorely needed in this world right now. We don't have many people doing that. Like, the whole thing is that in order for the market to work, in order for there to be enough liquidity, for the people that are providing, like the big liquidity providers can provide liquidity and deal with the cost of adverse execution when somebody is really knows what's going on is executing, and for there to be enough liquidity for that person that really knows what's going on to execute into, there has to be noise. Like, the market literally would not function without a certain amount of noise. So like, somebody has to day trade. Somebody has to. And I think that I can day trade so that you don't have to. Is kind of how I look at it. I can day trade. I get all of the insights. I'm watching the market and giving that information to you so that you can become more effective at your own day trading if you really want to do it. Or if you don't want to day trade, you can still get that information. Like, maybe you are going to swing trade, or you're just long-term investing, or you're just interested in it anyways. Because I think that there is stuff that is valuable to all of society here, what we know about the markets. Markets are not informationally efficient, and that kind of means that having people that are sitting there on the front lines and know what's going on is an important thing. Catch a penny stock, my friend caught one. Yeah. Our REEMF needs to go to $100, and then I can just retire. 1,000x my investment of $300 or whatever in it, and then I can retire. No. Well, I think that if we start doing this, like, Friday's not the day. So Monday is, or Sunday night rather, is maybe when I will start the Substack. And I'm thinking $20. If we had, like, let's say we wanted to make $12,000 a month, and we had, well, let's keep it to 150 subscribers. What would it need to be? 80. But I really don't think that 80 is a reasonable number. We could, as we develop along and as we get better at it, increase the price as I think that the value of it is increasing. But right now, I think that the value I can provide you guys is worth $20 a month. How much is the Zero Hedge subscription? I can't even remember. Oh, they're $30. Maybe we could do it $30. If I... At $30, if we got the number of subscriptions that we want, I don't think that I would be able to go back, you know, like it wouldn't be enough, but it would be enough to keep me going at least. But my wife would probably still have to work. My friend caught one last week. He made around 125,000. I told him to close because I always see these pull back. He held in and gave it all back. It happened to me once with, what was it? I can't even remember. I want to say that it was MSTR. There was one point at which it was like I had a short and it was like worth 12K, but then it expired worthless. And like the opportunity that I had to get 12K was like not, it wasn't realistic that I would have necessarily gotten that price. So, but it was still kind of suck. Watch it go away. Oh no, maybe it wasn't that. Maybe it was silver. Maybe it was silver. That's what it was. It was silver. And I really thought that it was going to keep going. I was like, this is just getting started. Market was doing better earlier before the government was open. Well, okay, so you know what? With the S&P 500 only getting down to 68.20 is not bad. Because I don't think that the action it really gets bad until it's below like 68.10 and then of course 6800. So we'll see how they shake it out today. Like the thing is that I think that when we had this downturn last week, was it last week or was it earlier in the week? Anyways, I noticed a very tangible sentiment shift on AI. And now what has happened since then is now people are really looking into the numbers and are really saying like, you know what? Even in the really good scenario, this doesn't necessarily make sense. That you're gonna invest like trillions of dollars into this, and like how are you gonna get a return from that? And how are you even going to fund that? You really can't even fund that without the government getting involved. There's just not enough money out there. So then it would have to collapse first, wouldn't it? That's kind of what I think is going to happen. So I don't like to use the word bubble, but I think that the AI scheme is going to collapse here. That they're investing too much of our capital into AI and they're not going to be able to get the return on it. That doesn't mean that AI is dead. It just means that the pace of development is going to be slowed down considerably and that we have to split that money out into other things like hiring people, because I don't think that it replaces people. Tangible sentiment shift. So if we end the day down, that would, I think, be a really big data point that, yeah, it's not over. Like something has fundamentally changed. Right? But maybe they recover all the downside and they end up, you know, up and the AI thing keeps going for a couple of months. That's actually probably more likely. Anyways. Okay, guys. I'm going to get going and wake up the kids. I will see you tomorrow. Stay